Welcome viewers. In this video, we are going to discuss possible levels for Nifty for the coming week and also performance of the levels that we discussed in our last weekly video. Okay. Um, Before going there, let us look at this chart. This is one-day time frame chart of Nifty, and these Fibonacci levels were marked prior to the last week before making or breaking the all-time highs. Okay, we'll change this. Yeah, this is the intraday action, so we are not going to discuss intraday here. Uh, yeah, here it is. So this was our expectation. What we expected Nifty might stay range bound for a little while and then try to break out of the range. You can see clearly that we had mentioned that it is slowly take out the range and move towards the swing high as well as all-time high. Okay. Uh, Prior to that, the market was trading in a range on upside 150 points, on the downside 300 points. Okay, so we expected that market may try to breach swing high, also the lifetime high. In case if it fails and breaks on the downside, we expected a big down move towards breach of 25,780. Roughly you can say 25,800 is breached. We expected a big down move. So what worked out is upside movement where Nifty has taken out the previous swing high, okay, and also taken out lifetime high made in September 2025. Okay, so this view on upside worked out very well. Okay, so let us get back to the present chart. Yeah, here it is. So now we tested the lifetime high that is made in September 2024, this high. Okay, but we failed to close above this level. On intraday basis, we made a high of, what is the high? 26,310, and this high is 277. So this is 26,277, and this high is 26,310. So we tested this level, breached and went above this level, but higher levels were not sustained on the day of breach, also on the very next day, that is today. So can we say that the breakout has failed and we are heading downwards? Or can we say that it is consolidating and in no time it is going to take out the 26,310, which is now the new lifetime high? So as far as today's action is concerned, market doesn't give any indication of where it wants to go. What I meant to say is there is no confirmation from the data whether it will break on upside or break on the downside. Okay. If you look at the high and low of today, this candle, this is around 108 points overall range, high minus low. So roughly you can say market. So high was 26,280, just about 277, and there, from there it got rejected. Okay, and the low is 26,172. The points are 108. So roughly you can say 26 to 26 plus or minus 54 points. Okay, so intraday it moved 54 points up and down from 26,226. Theoretically, you can say that. Okay, so this is a difficult kind of a trading range where whatever you do, the decay will eat into the your profits. Okay, so and this body of this candle is well within the high candle. Okay, indicating that it has not taken out the high or low of the candle but remained inside the body with very narrow range. And I'm stressing here, very narrow range. So, so honestly speaking, this doesn't give any indication of direction for the coming week. Okay, it is more like a indecisive. So, conservatively, what we can, for the purpose of analysis, for the purpose of trade setup, it is logical to remain neutral, keep our minds open, and if we are formulating a strategy for the next week, it we can consider only one case where Nifty or the overall market remains in a range, that is range bound. If you look at today's range, 108 point, that is 54 points up and down. It's a classical case of range bound market. So for the purpose of our analysis for tomorrow, for next week, we assume that market is likely to remain in this range, the high of this candle, and what is the low? 26,141. 26,141, 26,310. So unless Nifty moves above this level or below this level, and on closing basis sustains, then only we can take a balance. Okay, closing basis. It is not intraday basis, it is closing basis. Okay, so till the time, for the purpose of analysis, for the purpose of having a plan for trading for next coming week, we begin with non-directional range bound strategies. Okay, so we expect Nifty to remain range bound till it breaks on either side and sustains. Then we'll change our bias to either positive or negative accordingly. Okay, so in this kind of range bound days or the range bound market, if somebody is a pure optional buyer, if most of the retail traders are likely to be small buyers, so they are more vulnerable in these kinds of market because you don't find any good momentum in either direction, and you end up decaying your premium, thereby your capital. Okay, so if somebody is very capital is limited or it's a pure option buyer, they have to be very mindful of this fact that the range is very minimum and the momentum is lacking. So DK plays an important role. So preserving capital is the foremost thing for a trader. Okay, a caution is advised for such traders. That's all for now. And this kind of market is good for non-directional option strategies where you know the maximum risk in advance, and you can sell. For example, I'm telling one strategy is a strangle or straddles. Another strategy is like you sell at the market where you find the market is pivoting. Okay, both C's and P's, and you buy options, maybe one standard deviation or two times. Go for one standard deviation around 1% upside as well as downside. There you buy as insurance in case market begins to take a direction. Okay, so these kind of strategies make sense in a range bound market. So one may look at these kind of option strategies. Okay, that's all for now. Take care.